Hi, this is Paul from globaltradingsoftware.com, and I wanted to go through the ultimate trading bundle. All the xBrat trading indicators in one bundle. 6 signal trading indicators for different market conditions and trading strategies. 1 confirmation indicator that works to confirm signals from all 6 trading indicators. And then 1 trade management indicator that helps to understand behavior during the trade to maximize profits. Again, used with all those 6 xBrat trading indicators that have different trading strategies. All these indicators are designed to work well with Forex, futures, stocks and even crypto. Each is designed for different market conditions whilst looking at different trading strategies like scalping, day trading and swing trading. Each xBrat trading indicator is available separately for major trading platforms, but we bundled them together to give a great discount for those serious traders that want to trade instruments in all different types of market conditions with different types of trading strategies. All the hard work goes on behind the scenes with all the xBrat trading indicators and then simplified with easy visualizations on your trading charts, keeping strategies simple and repeatable. So let's take a look at them all and how they all work. The xBrat bias depth heat map. We're going to go through this first because this is used with all of the 6 trading signals indicators. So the trading indicator is the ultimate go no-go gauge for any trading signal strategy, in particular designed around giving those confirmations for those 6 xBrat trading signals. Subchart that looks up 6 time frames and gives you real-time bias, so whether it's bullish, neutral or bearish on each level. Making decisions, acting on trading signals that little bit easier, only identifying those high probability trades no matter what signals are coming along, so you're basically blocking out that noise. So again, we've got the 6 levels of bias depth, and we'll look at those in a minute. We've got a setting for scalping, a setting for day trading and a setting for swing trading also. Multiple time frames. So when we look at this chart here, we can see this is the 2-minute on ES. What we're looking for is confirmation on all 6. If I just extend that a little bit, you'll see the 6 time frames. So they go up time frames, but they go down. So what we're looking for is the smallest time frame at the top and then the largest time frame at the bottom, and this is the scalping setting. And we've got green for bullish, yellow for neutral, red for bearish. So we're looking at that depth of the bias there. So this is just a candle chart. We've got the bias depth heat map on there. We can see this moves down here, but look at the depth of the bias here. We're mainly green. We do touch a little bit of red and yellow there, but it comes back up again. So if we got a signal on any type of strategy here, we just would not take it. The same here, we've got a nice long, we could go long here as well, but then when it comes back down, look, we only get in 1, 2, 3 levels of red, a level of yellow, and still 2 levels of green. So we're not taking those short trades. Look what happens then. We come back up, we got all 6 green, and it's going. So again, this is the scalping setting here, and what we look for on the settings here, if we go down at the bottom and click on here, we can see scalping, day trading, swing trading. So it's there for confirmation, to go no-go gauge. So if we were to go up to the 15-minute time frame, for example, we'd have to change that setting to day trading, and then we'll be looking for those confirmations of signals. And again, we're going to go through those with all those 6 different xBrat trading signal generators for different market conditions, and see how that bias depth heat map. So it's going to be included on every single video moving forward here. So we see even on the 15-minute, this downward move, really, we do get 4 levels of red of bearish bias, but the last 2, the higher time frames, are still neutral. So we don't take that short signal. Look what happens, starts to move up. We're still mixed with green, yellow and red, so we're not taking any long signals right now, but then we go, again, it's big candle here, all 6 time frames bullish, and if signals arise around that sort of area, we've got that confirmation, and then you see the price action continue. So again, working for scalping, swing trading or day trading, and there's different settings there for those different time frames. So it's that confirmation again. So that's the bias depth heat map. So next is the XBrat Manager. So this is the ultimate trade management indicator suite for all instruments, for all time frames. The trade management tool has settings for swing trading, day trading conservative, day trading moderate, and day trading aggressive, depending what type of time frame you're trading on, whether you're a scalping, day trading, or swing trading. And again, now so we're starting to add to the chart. Now you can see the bias depth heat map is at the bottom, and now we have the manager on there. So the manager comprises of a couple of different things. We have the ribbon here, you see it's in green, that keeps us in the long trade, but also we have these dots above and below, and we have colored candles. So there is a link in the description of this video for the training for the manager, because that's very important to understand how to identify that behavior from these dots, if you like, to get those aggressive. And I do a very simple one now. So we're on the 3-minute time frame for ES. On the bias depth, we're on the scalping setting, and we're on day trading aggressive for the manager. You see here we have day trading aggressive, moderate, conservative. So day trading aggressive is really for scalping. So what happens here is that we've had a signal, whatever signal that is. We've got the confirmation from the bias depth heat map, because all six time frames are green. So we're going to go long. But what the manager does for you is not to panic. So one thing is the ribbon. The ribbon doesn't change from green to red. So that's our conservative trade management there. If we just look back a little bit, you can see the ribbon changes red here. So if we're in a long trade, the conservative trade management strategy with that day trading aggressive setting is that as long as this ribbon remains green, we stay in the trade. Okay, and we can adjust trailing stops between each pivot that's come down. But the next thing is these pivots, these pullbacks against the trade. So the dots above the candles, this is that denotes a higher than average volume candle. If there's no dots on a candle, that's average volume. If there's dots below, these blue dots, that's lower than average volume. So we can understand the behavior there. So we're into this trade, we have this first impulse move up, and then we start to pull back. We have the indecision doji with higher than average volume, then we have a down candle with higher than average volume. If we then get another down candle with higher than average volume, that's the time to get out. But look, the average volume starts to drop off, so we're getting this reluctance to sell. The average volume is dropping off, it's lower than average volume, so it's a low volume pullback, and then it goes again. And right now we've had a low volume pullback. Yes, it was instigated by a high volume down candle here, but it ran out of juice straight away. What we say basic rules is, if you get two higher than average volume down candles, use the aggressive state and get out of that trade. Right now the ribbon is still green, so we're going to stay in the trade. Nothing is coming down to say it's higher than average volume, so we're just being patient and waiting. So a lot of traders would panic at this stage on this first pullback and get out, but the manager's telling you to stay in. And that's the whole idea. So whether you're going long or short, if you're going short, obviously the ribbon will be red, and you'll be looking for it to change to green, or you'll be looking at those same higher or lower than average volume candles. The candles are colored as well. So a green candle is an up candle with higher volume than the previous candle. A gray candle is an up candle but with lower volume than the previous candle. And then conversely, we have a red candle for a down candle with higher volume than the previous candle. Then the cyan is a down candle with less volume. That helps us also when we've got that higher than average volume move up or down. We can see there are candles here. We just go grey, green, grey, green. So we're moving up, but it does little lower volume than the previous one. You can see it goes flat there, and we can see that on the behavior as well. So for example, this candle that's just closed here, That's an indecision doji. We rejected the lows on higher volume than the previous candle, but it's still lower than average volume. What we're looking for is a high volume rejection with higher than average volume, and then it will go back up again. Right now we're in this state where we've got lower than average volume and we're just going sideways, but the manager's telling us to stay in for now. So again, there's different settings with this, so whether you're scalping or day trading, swing trading, you would just change those settings to help you manage that, and it works with all of the xBrat trading signals that we're going to start to go through in a little while. So you'll notice on every single video from now on, you will have the bias depth heat map for confirmation, and you'll have the manager to manage the trade. Very, very important, these two, and this is why I've gone through them first, because they should be used in conjunction then with the signal generators, which comes from the xBrat trading indicators that we're going to talk about in a little while. So the first of the xBrat trading indicators is the xBratAlgo. So think of an experienced trader's brain as a blueprint for a trading algorithm. Then a desire to keep the charts as clutter-free as possible. So what you see on the chart are these 6-star or 5-star or 6-star buys or sell signals. So a little bit about that. So when I was trading professionally, one of the things I wanted to do was I used lots of combining of trading indicators. So 9 of those on a chart looks really, really complicated, and sometimes you miss trades and misread and everything. So the way I wanted to do this when we had this software developed is put those decision points on, but get rid of all the clutter. So 9 decision points have to be met, for example, for me to grade a trade a 3-star. Another special decision point to make it 4-star, another for 5-star, and then finally a total of 12 decision points have to be correct before I grade a trade, a signal, a 6-star, like a 6-star hotel if you like. So this is behind the scenes very complex, but what we're looking for with the xBratAlgo in particular, what we call runners, we're looking for the runners, and it probes for those when those decision points are correct. But again, we want to use that bias depth heat map for that confirmation, and then we're going to use the manager to manage it. So we've got that cradle to grave, we've got signal, confirmation, entry, and then trade management. So let's look on the left of the chart here. We've got a 6-star sell signal. So at this point, all 12 points of control are indeed present for that 6-star sell signal. But look at the bias depth. We're red, we're yellow. It's not a solid block of red, so we ignore that signal. So even though those 12 points of control are there, we haven't got that confirmation. But now when we get 5-star sell buy signal here on this candle, look at the bias depth heat map, all 6 green. 6-star buy signal, all 6 time frames are green. We go long. Okay, let's have a look at this first long trade here. Let's zoom in a little bit. So we've got because this is the 2-minute on NQ, we've got the manager set to day trading aggressive. So let's have a look at this trade. How would we enter? So with the 5-star, if I've got all 6 time frames on the bias depth green, I'm going to enter 1 tick or 2 ticks above that entry here. My stop is going to be just below the pivot before the signal. Simple. Okay, so that's my stop, that's my entry. If I miss that one, I can take the 6-star again because all 6, and we go 2 ticks above there. The next thing is to understand the manager and the behavior and how to manage this trade. So very, very simply, the ribbon remains green for the conservative type of trading strategy until this point here. It turns red. So this scalp, if you like, on NQ is worth 75 ticks. Okay. One of the things to not to do is panic when you have these pullbacks. So, and this is what those dots are for. Again, you see how it pulls back with lower than average volume, and then we get another impulse move up. We get a move down. We got a green candle with high and average volume there, discount it on the pullback. We get a down candle with higher than average volume, but the next down candle is cyan, so it's got less volume than this one, and it's got lower than average volume, and then it pulls back up again. At this point here, down candle with higher than average volume, down candle with higher than average volume, we can get out at that point aggressive before the ribbon turns red. Very, very simple. So that xBratAlgo gives us those trading signals. We then use the bias depth to confirm them, and then we trade them. Let's have a look at some more that we come here. So at this point here, we have a 6-star buy signal. All 6 are in the green, if you like. On the bias depth, we go 2 ticks above. Look at this big red candle coming down here. It comes back up again, ribbon turns red. That's about a break-even trade there, because our stop is below this pivot prior to that 6-star buy signal. So again, we're probing and we're looking for runners. This one didn't run. It was around about a break-even when the ribbon turned red. The next one is the runner. So you've got to keep probing, getting those 5, 6-star signals for me. Then we get another signal at this point here. We're good to go. All 6 time frames are green. We got an entry, I think, sensibly above the previous pivot. Okay, at this point here, your stop is at this point, just below that pivot there. And then we get the runner. Look at this pullback here, lower than average volume, lower than average volume, boom, again. We go sideways, lower than average volume, and now we're going sideways again with lower than average volume. So right now, this trade is at around about 598 ticks. So this was the runner that we're looking for. We need to probe, so we need those signals, these confirmations. So yes, this was a 75 tick trade for scalping. That's pretty good, but we didn't take the short because we didn't get the confirmation from the bias depth. We keep probing, we got a 6-star buy here, everything worked out, but it was break even. Then we get another 6-star buy, then we get the runner, and that's what the xBratAlgo is for. So this is on a scalping time frame, but you can use it on a day trading time frame, on a 15-minute, for example. You can use it on a swing trading time frame for stocks. So let's have a look at one more example now. Okay, so this is the xBratAlgo on a stock, on Costco, on the 4-hour time frame. So again, I want to show the versatility of this, and still using the bias depth heat map and the manager to manage the trade. So we get a 6-star buy on Costco on this candle here. All 6 time frames are green, so we're going to look for the long. We're going to enter at this sort of price here, just above that pivot, about 460.86, just there. Okay, then we're long. So we can see now I've got the manager set on day trading conservative. It's not quite swing trading, because I wanted to be a little bit more aggressive with this. If I show you the changes here, if we go to swing trading, for me, I only use this really on the weekly time frame. If I'm on the daily or the 4-hour, this is why we put that extra level in there. We can go day trading conservative. So we're looking to manage this trade. We do get some higher than average volume pullbacks here, but for me, the cloud is still very green and we're still good. Again, at this point here, we can be aggressive and take out, because we get some really quite big moves here. We get a red candle with higher than average volume, we get a red candle with higher than average volume straight after it. So at that point, at $538, I would probably take that profit at that point. Okay, if I'd have gone conservative, I could have taken profit at $553 when the ribbon changed there again. So there's those options with the manager, but the main thing is we've got the xBratAlgo. We've got 12 decision points, all saying you've got to go long. Got the confirmation from the bias depth heat map, and we go long. And this is a big move. That's the runner that we're looking for. When we move along a little bit, we get a 6-star sell here, but look, the highest time frame is still yellow. We don't take it, it doesn't run. We get a 6-star buy. We're mixed between yellow in here and green. It does go a little bit, comes back down again. We get a 6-star sell. We get a yellow at the bottom. We don't take the signal. Okay, we get a 6-star sell at this point here. We're still yellow. We have to stick to the rules to get the runners with the xBratAlgo. Get the confirmation and then manage it with the manager. Very, very simple. So hopefully you can see the diversity there, whether we're scalping, day trading, or even swing trading with the xBratAlgo. These are very strong trading signals, but we still need that confirmation to dismiss those lower probability ones as well. So because remember, we're looking for the runners. Hopefully that helps. Let's go on to the next one. So next is the xBrat Auto Harmonic Patterns Indicator. So harmonics in general are very, very difficult to trade because there's just lots of work involved. So to get to measure those A, B, C, D corrections, identify which pattern it is and which way you're going to trade, there's a lot of work. So what we did was develop software to do this all behind the scenes. This is the TradingView version, and again it's available for lots of other platforms, but the idea with this is it's designed to take away the heavy lifting out of traders with harmonic trading strategy. So the software automatically identifies and projects harmonic pattern completion zones for the 6 most tradable harmonic patterns. The harmonic pattern is also coloured corresponding to the resulting trading opportunity, and we'll talk about that on the chart in a minute. So coloured green, we're looking for a bullish trading opportunity, and for red, for a bearish trading opportunity. If the pattern completes in the projected completion zone, then there is a high probability of the resulting trade being successful. The patterns that we concentrate on are the alternate bat, the butterfly, crab, deep crab, and Gartley. So whether you're swing trading, day trading, or scalping, or the auto harmonic pattern will project those patterns on any time frame, but they won't happen as often, and they're for different types of market conditions. So while we've got this overview here, for example, I'm just going to put on the xBratAlgo just to show you here. Okay, this long resulting trade from this bat pattern here that went up, there's no xBratAlgo signal there. Okay, and this is it's a different strategy for different types of market conditions. Let's switch that xBratAlgo off again. And let's talk about this now. The first one on the left, the butterfly pattern. You can see this automated completion zone here. The D pivot completed in a way that it actually technically is a butterfly pattern, but it didn't complete in the automated completion zone. So we're not looking for a resulting bearish trade, and look what happened. It went up. The next one I really want to concentrate on is the bat pattern, because the D pivot did complete in the automated completion zone here. This is the 4-hour time frame on RTX, so it's a stock. We'd be looking to swing this. We're looking for those entries and things like that. But the main thing is the bat pattern is recognized. The D pivot completed in the automated completion zone. So now the next thing is we're looking for confirmation from the bias depth heat map. So everything is different. Every trading situation is different. So what happens here with the D pivot, we come back down to test this automated completion zone again, and then start to move away. Okay, when we start to move away, the bias depth heat map finally goes all 6 green. So that's our long entry, probably just above this pivot here, sensibly above this pivot here. Okay, because all 6 are aligned with the bias depth heat map to give us that confirmation. We've not really broken any rules. That harmonic pattern has completed, but we've come back down to test this. It's a collection of fib zones, so it gets lots of different fib zones, and it gives you the best fit. So this automated completion zone did act as support and started to move away again. So that's our resulting trade here. Because we're on the 4-hour time frame, we've got a slightly more conservative setting on the manager, and we can see we finally take the profit at this point here. There are options to take that with the dots, but one of the main thing is when we have that first pullback, look at this, lower than average volume, and then it comes up again. We pull back, lower than average volume, it comes up again. We get higher than average volume candle here, but then we get this big doji, it comes down, and then finally we get the red just change on that cloud there. So that's a stock example on 4-hour time frame. Let's have a look at a lower time frame example now. So this is E-mini futures on the 3-minute time frame. So again, we've got those different settings on the heat map and the manager to manage these trades that we discussed before. Crab pattern forms this time, completes in the automated completion zone. D pivot is in that completion zone. That's one big tick in the box. For that to happen, very, very difficult, but it's happened. So we've got to look for that resulting trade. We've got to wait and be patient and wait for the bias depth to go all green, which it does do on this candle here. Sensibly though, in this situation, we'd be going long above the A and the C pivot to make sure it broke out above that, what is short-term resistance. So crab pattern's completed, it's coloured in green, it's completed in the automated completion zone, big tick in the box, wait for the confirmation, go long. We then get a pullback here on lower than average volume, comes back up, eventually we get this move down, and then we get that move. So again, they don't happen as often as xBratAlgo, for example, but they happen predominantly when xBratAlgo doesn't, because it's different type of market conditions and patterns that are forming within the market on those specific time frames. So let's have a look at one more example. Okay, so the next example for the xBrat Auto Harmonics is a Forex pair, Euro US dollar, one of the most traded Forex pairs on the planet. We are on the 15-minute time frame, so really a day trading time frame. So the manager again and the bias depth heat map, those settings have been changed to compensate for that day trading, if you like. So first of all, we're going to look at shorts this time because we haven't looked at a short example so far. We get this first back pattern complete, but it doesn't complete in the automated completion zone. We're not trading. The next one is the most important one. The next back pattern completes in the automated completion zone here. You see the A, B, C, D completes in the automated completion zone. At this point of completion, the bias depth heat map is very mixed. Green, red, yellow. We're not interested until we get all 6 time frames in the red here. Now this is the time to get in. So aggressive entry once this 15-minute candle's closed on all 6 time frames on the bias depth heat map. That's our aggressive entry here. Okay, we could go a little bit more conservative below the C pivot if we wish, but on the 15-minute time frame, unlike that one that we talked about on the 3-minute with ES, we need to be reasonably aggressive below that, because otherwise we're going to miss a lot of pips, and then we rely on the manager. So again, back pattern completes, it's coloured in red, we're looking for a short. We then need that confirmation from the bias depth heat map. We get it, we go the entry a couple of pips below that candle when it closes, and then we got to manage the trade. We see it pull back against that bearish move, lower than average volume, comes back down again. Okay, we're down again. We do get a pullback here, average, higher than average volumes going sideways. Eventually the ribbon turns green, it's time to get out. Another big trade. So hopefully through those examples you can see the diversity of the xBrat Auto Harmonics, but also the complexity is taken away, and it gives signals in different market conditions to the other trading indicators. And when all the stars are aligned, when that D pivot completes in that automated completion zone, you just need that confirmation from the bias depth heat map, and then you just manage it with the manager. So another great addition to your trading toolbox. So the next xBrat trading indicator is the xBrat bits, the breakout intelligent breakout signals indicator. So this, again, different types of market conditions. What we're looking for here is a mixture of price action and volume. So one of the important things here is with stocks it's great, with futures it's great because you get volume. If you're going to trade this with Forex, your broker must give you the volume data as well. So what we're looking for is a squeeze in price action with an increase in volume, so it's ready to pop, if you like. So we've got some examples here. We basically print the entry and the stop loss. So what we're looking for is This is the signal candle right here. This has an increase in volume. It's colored in green, so it has more volume than the previous candle. The actual range of the candle is less than or equal to the average range of the previous 20 candles. So it's a smaller candle but with increased volume, ready to pop. So what we do is we give you the entry, the stop, target 1 in cyan, target 2 in orange, in the magenta, target 3, and target 4 there in the solid cyan. And again, like all the other indicators, what we're looking for is confirmation from the bias depth heat map. Again, this is 5 minute on Glasgow SmithKline, GSK. So this is a stock. We are scalping or day trading, so we need to have a real aggressive setting on the bias depth heat map and the manager. Very, very simple. We've got the signal. We've got 6 time frames, all green at the bottom, so we're good to go. We go long. If we set our take profit at the first target, it takes the target there. If we want to not use the targets but use the manager, we can see all that this long goes all the way towards the close and the ribbon turns red at this point here. So our entry was at 44.27 and our exit was around 44.41. Great day trading opportunity there on GSK. We had other signals coming in at this point here. This is the signal candle here. You see that squeeze candle here. That's the entry, and that went up to hit target 3 and eventually target 4 with there. So there was multiple trading opportunities to add to that that first initial signal. But again, when we are looking for those signals, if we get this first one that actually we got the entry, but it came down through the stop even before the entry, we cancel the order. We then start to come back up, we get another signal here, it never triggered. Then we get this next signal, got the confirmation, we go long, and then we've got options. We can choose the 1, 2, 3 or 4 target zones to take our profit, or we can go more conservative with the manager. So that's a stocks example, and really the bits is best for scalping and day trading. And again, different types of market conditions. So if I switch the xBratAlgo on here, you will see no signals. Okay, if I switch the harmonics on here, you will see no signals. So it's a different type of market condition, different trading strategy. Let's have a look at a different example. Okay, so this is a 3-minute scalping on 6J, which is the Japanese yen. So I wanted to use a currency here, but not rather than Forex, use the currency futures, because I know I'm guaranteed with the broker to get that volume, because it's very, very important that we get an increase in volume. This is the signal candle here. It's a red candle. The previous candle was red, but for that then to be colored in red, it has to have even more volume than this candle. The signal candle's range is less than or equal to the average of the previous 20 candles. So this is our signal candle to go short. We look down on the bias depth heat map, and we are red, all red, ready to go, good to go long. Doesn't actually trigger to this point, but then it comes all the way down to target 4 very, very quickly, and you take your profit. Let's have a look at another example. Okay, so this is the Dow futures YM on the 1 minute, so what I call super scalping. Again, the bits as indicated, there's a couple of signals there, but I'm going to concentrate on this one here. We've got this squeeze candle here. It's green, so it's more volume than the previous candle, which is a cyan. It's also very small, so we're ready to squeeze. We look at the bias depth heat map there, all green, ready to go, and then it just pops. It goes through target 1, 2, 3, 4, and it just keeps running. And this is where the manager comes in here. So we've got a really great move up here, and then we start to get higher than average volume indecision dojis and start to move down. That would be the aggressive exit here. But this trade, again, super scalping trade here with the bits, that's 137 ticks over less than 6 minutes. So that's a really, really strong signal. Again, it's about identifying it. The stop's not been broken. Bias depth heat map is giving us the confirmation. and then it goes. So we can then either decide to take it to target 4 every time or just get out, or use the manager. The manager can be set. Again, we're on day trading aggressive right now, so again we can see that, and we probably use this indication here where we get that total indecision. We got rejection of those highs on higher than average volume. It's going to turn back down, and it did. So again, it's about understanding that behavior. So again, this is the bits, the breakout intelligent trading signals, really for scalping and day trading, and it uses both volume and price action. So again, we're looking at different types of market conditions for this indicator compared to what we've already discussed with the Harmonics and the xBratAlgo. So next is the xBrat range breakout trading indicator. This is specific to specific times of the day and specific ranges, and is great for trading futures or Forex. It's not really for stocks. It's looking at the New York Stock Exchange opens, it's looking at the gold pit and the oil pit opens. So you're looking at trading metals, energy, and indexes and currencies, because those ranges can be defined quite volatile, and once we've defined that range becomes quite prominent until the next opening range as well. So we can trade not just initially through that opening range, but then through the range, and we'll look at some examples on this right now. So this is YMs, the Dow, and we use the 15-minute time frame to identify those, and we're really only interested in the New York Stock Exchange open and the London Stock Exchange open. And again, we have that bias depth heat map. So what it does is defines that opening range. So we get the open, and the range is defined with the top and the bottom line. The range then is coloured, so the range is coloured red in this case, so we're only looking for short breakouts at this point while the bias is coloured red. But when we look down, we can see that the bias depth heat map is not all red, so we don't take this initial trade. We then move back up through the range. This candle closes, it goes to green. We miss that potential opportunity to come back down. Then we come back in the range here. The range turns green after this candle closes at this point. All six time frames on the bias depth heat map to green. We trade this breakout here. We can then use the manager. When the manager turns red and it's on day trading aggressive, we take the profit. Or we can set a number of ticks to actually take that particular breakout trade every single time. We then move through the night. There's no other trading opportunities. Then we get the London Stock Exchange open. A very small range here. Even though it's a red candle, the London tag is tagged in green. The range is defined in green, so we're only looking for the long. And hey, look, but down below, all 6 time frames on the bias depth heat map are green. So we don't trade on this candle, but when this candle comes out 2 ticks above the high of that range, we go long, and we're still in this long right now because the manager is saying stay in. Even though we've had this pullback and most people would panic, these are lower than average volume. We do get one higher than average volume down candle, but then we're recovering straight back up with an up candle, and then the manager is keeping us in the trade. So that's one example. Let's have a look at another. Okay, so this is oil, different trading platform this time, because we do develop these indicators that work the same on different platforms. Previously I've been using TradingView. This is just a think or swim version. Again, I've got the manager on there, I've got the bias depth heat map. So the oil has a one oil pit open, and that is at 9 AM EST, and we use the 5-minute time frame to define that. So the software does it all automatically. We get that first candle here. The range is coloured in green, so we're only looking for the long. Look down on the bias depth heat map, all green. There's the long breakout there. Okay, all the way there until the ribbon on the manager turns red here, or in fact we look at those higher than average volumes. But that's a great breakout. And what I like to do on oil is perhaps trade 3 contracts out of there. At 10 ticks I take one contract off, at 20 ticks I take another contract off, and at 30 ticks and they take another. Never be greedy on these types of trades. Works very well on oil. So then Continuous trading opportunities, as we come down through the range again, we're yellow, so we've got a neutral, so we don't trade that red. Also, you'll see on the bias depth heat map we're only two levels down on the red as well, so we don't trade that. But then when it comes back through, the bias on the range turns green. All 6 time frames are green on the bias depth heat map. We trade that long again out of that range. And look how this ribbon on the manager never ever turns red until this point here, 105.04, and the entry was 102.45 ish. So very fancy. It's a great trading opportunity there. So sometimes you can get 30, 40, 50, 60 ticks. Other times, if you're going to be using that manager, you can let it run. You can look at these pullbacks and lower than average volume and not panic, and then you see the ribbon never changes. Really good trading opportunity. And then we move forward, it never touches that range again. Then we get the next opening range for the next day. We red, we go short. Now in this case though, the bias depth heat map is not all red. So according to our rules, we don't take that trade. But there will be other trading opportunities with the other signal generators like the xBratAlgo, for example, that will find moves in this move, and you will trade those trading opportunities. So again, it's specific type of strategy, and you've got to stick to those rules. In this case, we go green, then we go red, and then we come down. So again, it's not for trading continually through the day. In this case here, we get a red bias on the oil. We could go short, but there's no breakout trade. It comes back down through the opening range. The bias is red. All 6 time frames are red on the bias depth heat map. We take the short. We then take the trade all the way down until the ribbon on the manager turns green, and we take the profit. We could then trade up through there if it comes up. It doesn't. So that's just another example, and again specific for futures, for currencies, and for those metals, those oils, the golds and things like that. We have we inform our users of the specific time frames to use for metals and energy, which is different to currencies, which is different to indexes. But again, the software does all this behind the scenes, and then you're looking for that confirmation of the trade direction. The ranges are defined, and you look to trade that range initially at the open, but also then continue. So let's have a look at one more example. So this is a currencies example, 6B. So it's the British pound futures. So what we're really interested in with currencies is either the New York Gold Pit Open, or more importantly, when we're looking at the British pound, that European Gold Pit Open, because that's when all the traders start to work, and there's more volume, there's more volatility, and this is what we're looking for. You see overnight the 6B really does nothing. Then we get the European Gold Pit Open here, and then we define the range. We use the 10-minute on currencies here. So again, if you're using GBP US dollar, it would be the opposite way round. You'd be going short. But here, this is the British pound futures. We get the opening range candle. It's coloured in green, the tag, and also it's coloured in green on the opening range. We look down. We're all 6 time frames in the green on the bias depth heat map. Couple of candles later, we don't trigger, but then we turn all green again on the bias depth heat map, and then it breaks out, and it breaks out with force, and this is what we're looking for. And then look at the manager, it hasn't even turned red yet. So we get this pullback here on lower than average volume. We do get high and average volume on one candle, okay, so one candle wonder we call it, and then it starts to come back up again. We're going sideways slightly, but the ribbon hasn't turned green. So when we measure this type of trade, we've got a runner here. We've got 111 ticks on 6B. So really good. And again, if you're using a Forex pair, would go the other way. Let's have a look at that right now. So this is a Forex pair. It's FXCM data. We've had the European Open, and again, does exactly the same as futures, so there's no real difference really. The only thing is, if you are trading Forex rather than futures, you can see how really powerful it is and understanding. And again, you can switch off and you can change those opening ranges. So if you've got a real prominent data point in a day, you can actually identify that with the software, relabel it whatever you want to relabel it, and it'll define that range for you as well. But more often than not, that European gold pit open at 8 a.m. European time is very, very strong, and it's the start of gold trading. It's the start of Forex trading in Europe, and that's when you get those big moves. And again, this is GBP US dollar. Again, on the 10-minute time frame, we've defined the range. The software's defined the range. It's coloured the range in green, so you're only looking for long. You've got the confirmation by the 6 time frames on the bias depth heat map, and you go long. And again, this is still long here with the manager. So hopefully that again, we're not looking at stocks here. This is specific towards Forex and futures, and it's a totally different strategy to all the others that we've discussed so far. It's very relevant, and we've got continual trading opportunities, or we just get the initial range breakout and it just goes hell for leather. So another one of the xBrat trading indicators for different types of strategies and market conditions. So the next trading indicator is the xBrat Elliottwave. Now every time somebody mentions Elliottwave, they see it as very complicated and hard to understand. So Elliottwave theory and strategies can be complex, but what this indicator does is take all the way the noise and concentrates on the highest probability move, which is the 5th wave. And what it does is apply some very visual tests, if you like, for that wave 4 pullback to see if we're ready to go. Okay, so again, it automatically labels those Elliott waves. And this is 6B, so futures on the 3-minute. We're going to look at swing trading on a higher time frame on a stock. So basically this strategy is looking for pullbacks against the main trend, measuring that pullback, and then trading that trend continuation. So again, a different type of market condition, a different type of trading strategy. And that's all Elliottwave is, a pullback against the main trend and then getting a trend continuation trade, like in this case. So let's just zoom in a little bit and have a look at this. So what we get is we get a wave 4 pullback, and it pulls back into what we call our probability pullback zones, green, amber, red. The green zone represents an 85% probability, that it's going to go on and hit this automated 5th wave target zone, which it did. If it pulls back into the amber zone, 80, into the red, 75, any more, and we don't trade it. We've got an Elliottwave oscillator here. You can see this oscillator down in the subcharts here. On the wave 4, we like to see that crown against the main green here within a set parameters, and we do that in our training bootcamp, and we show you how to measure that. So that's again looking at this performance of the wave 4 pullback. And then we have a special false breakout stochastic. So these little yellow dots on top of the stochastic denote a really strong bullish trend. Then on a wave 4, if we pull back against that and cross over into the oversold zone during the wave 4, another example or measurement of the performance of the wave 4, it's strong enough to pull back against that main strong bullish trend. It crosses over in the oversold zone, and the likelihood is it wants to return to that main bullish state. So we with the suite of indicators that we've got, it's very visual just to actually confirm that wave 4 has behaved well. And then we've got some EMA 6-4 EMA highs and lows here to get for the entry. But also look, we wait until we get all 6 on here for the bias depth heat map on this candle here. Then we would confirm that entry, go long around about 1.2646, and then we'd go into that 5th wave target zone and take the profit there. Or we can manage that. So if we go to the manager now, we are on day trading aggressive. Now, one of the things we talk about with the manager is we need to be on day trading moderate or conservative with a with trend trade, if you like. So once we're into this trade, we're looking at these pullbacks here, lower than average volume, don't panic, lower than average volume, and then we go and hit that fifth wave target zone there. So you can see the Elliott waves already started counting the next potential trend. So again, Elliott wave is a with trend trade, and we're not interested in trading the third wave, the second wave, or anything like that. Just that high probability fifth wave move is what we're after. Sometimes that continues through that fifth wave target zone and turns into a wave 3. So let's have a look at another example. Okay, so this is Microsoft on the weekly time frame, and we can see here this pullback that we've had recently has pulled back on a wave 4. Not only that, you can see the Elliott wave oscillators crowned in the red there. We've pulled back and we've found some sort of support on the weekly time frame in this green zone. It's printed a fifth wave target zone already at $380. If this support holds and we move back into this through this 6-4 moving average high around about 294, maybe 300 to keep it safe, there's a fifth wave move on there. We can see the false breakout stochastic on the top there, these yellow dots. It's pulled back, it's just crossed over in the oversold zone. So again, we're looking at longer term investments in Microsoft right now. This wave 4 has behaved very, very well. If this finds support and starts to move away from that support, there's an 85% probability it's going to go on and hit that $380. So that helps us make that decision. So again, this is very adaptable, this Elliottwave indicator suite. So if you're investing in stocks, look at this weekly time frame. It's telling us now, if this starts to move back above 280, 290, Microsoft is on its way and probably going to make new highs. So we've measured that profit taking pullback on that wave 4, and we want to trade or invest in this stock on that fifth wave move. So very versatile. One of the only indicators that we've got really that, it's not just swing trading, but then to investing opportunities in stocks as well. So again, different market conditions here as well. So hopefully that helps with the Elliottwave indicator suite. As soon as you say Elliott wave, people think it's complicated. We've taken that complication away, do all the hard work behind the scenes and print. And the main thing is look at that performance of the wave 4, make that decision to entry, get your confirmation from your bias depth heat map. It's all green right now. So if we get up above this sort of 290, maybe 300, we're still all green, we're good to go to 380. So we've got that confirmation already. Hopefully that helps. And on to the last trading indicator from the XBrat trading bundle. So the last XBrat trading indicator is called the roller coaster. So what this does, it looks at the traditional stochastic MACD cross type trading strategy for those sort of market conditions that are going from overbought to oversold to overbought to oversold. So there's no real direction. They're in a range, but they're going up and down within that range. So what this does is allows us to with a few extra additions to work that out, give you buy, sell signals, the entry, the stop, and the trailing stop as well. This is great for intraday, for swing trading, for day trading, for scalping. I'm just going to go through a few examples here. Now, we would use normal traditional candles on here, but also this is fantastic when day trading, when you're using tick charts, Renko, Uni Renko, volume charts, that sort of thing. And I'm going to give you one example of that in a minute. So let's have a look at this. This is Caterpillar on the 1 hour, and what we find is when we get a signal, we print a green line for entry and a red line for stop, and then we start to print a little trailing stop here. You can see on this one here. So little winner, break even. We then get a long signal here, but it never triggered, never went through the entry. We then get as we're coming back down on the roller coaster, we're getting a short signal here. Look at the bias depth heat map again to give you that confirmation. All 6 are red, so we go short. Then we start to print the trailing stop position down here. So with this one, we don't use the manager, we use the bias depth confirmation. The software prints this trailing stop and then it takes it out. Looks what happens at the bottom of the roller coaster. It comes back up again. We get a buy signal at this point here. We're not all 6 green down on the bias depth, so I wouldn't go in just yet. Hangs around, goes sideways, then look at the bias depth here. On this candle here, right near the entry that we've printed quite a while ago, it goes green. You go long, it shoots up, and we get that trailing stop printed on the chart. As soon as it breaks that, take out your trade. Then at the top of the roller coaster, we get another short trade to go here. Look at the bias depth heat map. All 6 time frames are red. We go short, trailing stop gets printed. That's when we take the profit. So that's an example using stocks on the 1 hour time frame. Let's go down a time frame and look at something on futures. Okay, so this is ES using Renko. Okay, a lot of people day trading like to use Renko. And we can see here we've got a short signal, exactly the same, I've just coloured it different, that's all. With the green, the red, goes short, prints the trailing stop, takes out a trailing stop, take your profit. Bottom of the roller coaster, long signal, go long. Top of the roller coaster, got a signal, go short. Then we go long, then we go short. All these are winning trades. These are trailing stops being hit. Really strong type of roller coaster motion, different market conditions. So remember, we just discussed Elliottwave, where we get a really long impulse move up on the wave 3. We're looking for that wave 4 pullback against that main trend. This particular instrument isn't trending. What we're doing is we're getting this up and down motion like a roller coaster, and we're using that stochastic MACD cross with a few EMAs and extras in the background doing all those calculations, and it's identifying longs and shorts as we go there and through those up and down sort of motions in that different type of market condition. Let's have a look at one more example. Okay, so final example, and this will blow your mind. This is Euro US dollar on Renko on our Ninja Trader version. And this goes to show you how versatile this is. Look at this. We get a long trade, trailing stop printed, takes a trailing stop. Short trade with that red arrow, go short here, trailing stop printed, get to the bottom of the roller coaster, it takes out the trailing stop, long, we go long, takes out a trailing stop, we go short, we go a long signal there, we go long, we go short. This is a true reflection of that roller coaster indicator, where we're going up and down within a range, where the indicator itself is identifying the right situations to go long and short, and printing those entries, those stops, those trailing stops. And again, it's versatile, especially for those traders, those day traders that like to trade with those Renkos, Uni-Renkos, tick charts, volume charts. And those charts are really prominent when you're trading within that range and you're going up and down in that sort of motion. Really great. And that roller coaster, the Expratt roller coaster trading indicator, is perfect for those sort of market conditions, whether you're on a 4 hour or 1 hour with stocks, or you're on a small Uni-Renko time frame with Euro US dollar, or you know, whatever. It really looks for those roller coaster motion within the markets. That stochastic MACD cross with a couple of extras to really help us out with those, not just the entries, the stops and the trailing stops, and you really get some great looking trades. So that's the Expratt Ultimate Trading Bundle. Check out all the links below to actually get the bundle itself, or go onto the website and choose your platform and the individual Expratt indicator that suits your market conditions. But again, for those serious traders that want to look at different market conditions, whether it's trading with the trend with Elliottwave, or explosive breakouts with the bits, the range breakouts, you know, choose what you would need and get out there and start trading. And always get that bias depth heat map to give you those confirmations, and the manager to manage those trades. Again, Ultimate Trading Bundle, all the trading indicators that you need for different market conditions, different types of strategies, whether it's scalping, day trading, swing trading, investing, and then that trade management and that confirmation. So everything you need all in one trading bundle.